seems the time to make predictions for the property market over the next couple of years. They're coming out thick and fast from all the research houses and from the various media commentators. And they all seem to become much more positive than they were a few months ago. And I agree with that. But I don't agree with some that are suggesting we're going to get a property boom. And there's one highly quoted source that's suggesting the Brisbane property market is going to increase by 20% over the next 3 years. Is that possible? Well, that's the discussion we're going to have today with Brett Warren. This is the audio track of a masterclass, a video that I recently ran, and if you missed it on Property Update, there's a link in the show notes to where you can see some of the charts and some of the graphs. Having said that, though, there's great message in this audio, and even though I own the Metropole Brisbane office, which has been Brisbane's largest buyers agency for well over a decade. We've probably bought more properties in Brisbane than all the other buyers agents combined. You're probably going to be surprised that I disagree that Brisbane isn't going to do as well as some people predict. Having said that, we are going to give you some indication of what's likely to be ahead in the Brisbane property market, how to outperform the Brisbane property market as I chat with Brett Warren, and we're also going to show you where you probably can get that sort of growth, how you possibly can get that sort of growth, but you better not expect it, because if you do, you'll be disappointed. So let's get on with the discussion with Brett Warren. Welcome to this episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the 5th time he's won a similar award in the last 7 years.
Today we're going to have a masterclass about what's going on with the Brisbane property market, and will it really grow 20% over the next few years like some experts are suggesting? Well, I think our answer is going to surprise you. And to help us discuss what's happening in the Brisbane property market is Brett Warren, Director of Metropole Property Strategists in Brisbane, and my business partner there. Hello, Brett.
Hi, Michael. How are you going? Good to be with you.
Thank you. So we're going to have a bit of a chat about what's going on in the Brisbane property market. We're at a really interesting stage in the Australian property market. I think we would have had a very, very different discussion if the result of the federal election was different. But since the election, we've had a couple of interest rate drops. We've got a tax cut coming. We've had APRA lowering their serviceability criteria, and the mood has changed considerably. So there's a much more positive mood in the property market. And currently, there's a whole range of predictions. Many different organisations, forecasting houses, research houses have come up with predictions. And one that I know some people are clinging to is that the Brisbane property market's going to go up between now and 2 years' time, 3 years' time by 20%. Is that likely? Well, I'm not sure, actually. So let's unpack all this. So this property masterclass is for you if you're a beginning investor and you want to get it right. You don't want to make the mistakes just by buying because forecasts tell you where to go. This is for you if you're an established investor and wanting to grow your portfolio more successfully. This is for you if you're considering buying an investment property. And some of the principles we're going to talk about today, even though they relate to Brisbane, are going to relate to you wherever you want to invest. And even if you're not thinking about buying in Brisbane, maybe you should consider it. Maybe you should become a borderless investor because it's one of our big capital cities and it hasn't had the fall that the others have had. And there's no doubt it is going to still be a very, very strong performer. So let's unpack all this. So, Brett, let's first of all start off. There have been some interesting predictions, and one of them, the one from BIS Oxford, which got a lot of publicity, said that between now and 2022, in 3 years' time, Brisbane property values could go up 20%. What do you think about that?
It's interesting, isn't it, Michael, what the difference a couple of months will make. A couple of months ago, there's a lot of headwinds and, confusion. And I guess now we've got some tailwinds with interest cuts and APRA and things like that. And we're at the bottom of another cycle. So naturally, there's going to be a number of predictions that are going to be made. And I picked up on this one the other day also. Look, it's an interesting prediction. I think in most areas, I don't think it will grow by 20%, to be honest, Michael. I think you're going to have to select the right kinds of properties in the right kinds of locations. And if you do that right, you'll give yourself every chance of hitting that target.
In fact, if it does grow that much, I think the Reserve Bank is going to be very worried. They're dropping interest rates at the moment to encourage employment, to grease the wheels of industry and get things going. But their policies are going to be a failure if they create another boom. So I see the market rising. No argument about that. And, well, some markets rising because there's not even one Brisbane property market, as you said. But if those sort of figures eventuate, overall, if anyone can just buy a property in Brisbane, go away on holidays for 3 years and come back and be much richer, that's the setting for the next bust again, isn't it? So Let's go back. Let's have a look. How did the Brisbane property market perform over the last 5 years?
Yeah, so look, obviously well behind the southern cousins there in Sydney and Melbourne. They're looking at around 7%, and that's on houses and apartments. Obviously, houses have performed slightly stronger than that, probably a lot better than that over that period of time, whereas apartments have been affected by the oversupply, which we're just starting to see that being absorbed with our population growth. So, look, it's been okay. It's been steady, but it hasn't shot the stars out like a Sydney or a Melbourne.
No, it hasn't. But interestingly, I know we've sat down with some of our clients at Metropole who've had their client reviews, and we've seen them. They've come along to our wealth retreat, and they've actually had, well, quite a number of them have had double-digit growth anyway. And for others, we've actually helped them manufacture capital growth by renovations or development. So I guess we've got to make it clear there's not one Brisbane market, but we're actually talking today about Brisbane, not Queensland, and that's a big mistake people make.
Yeah, it certainly is. There's a lot of urban sprawl in the other capitals, but Brisbane doesn't have that. It's quite isolated, and we'll talk in a moment about where the majority of jobs are being created, and that's going to create the highest demand for property, and that's certainly in the heart of Brisbane.
Okay, so why are economists, why are we at Metropole in our research suggesting that now Brisbane is in for a surge in property values?
Yeah, look, Michael, I'm sure you would have heard that before, right? Over the last 5 or 10 years, it's Brisbane's turn and all the rest of it. But, I mean, let's look at some of the numbers. Once we had the floods and the mining downturn, you can see our interstate migration and overseas migration from about 2010 and 11 really start to decline. So we didn't have the numbers to support that kind of growth. And also with the interstate migration, but now that's starting to pick up. So you can see those numbers start to tick up. And I think that's where people are starting to get a little bit more excited because the numbers are actually starting to tell a story there.
So what you're basically seeing is a combination of three things on this graph. The blue line is your natural increase, and I guess people are living longer in Brisbane, even though, and they're having more babies, so we're making more people than are dying off. Net interstate migration, the grey line, has definitely picked up over the last couple of years, and people are moving there not just because it's cheaper, because there's even cheaper places than Brisbane, but they're moving there partly for the lifestyle, but mainly because there's jobs. Otherwise, they wouldn't move there. And then net overseas migration is also picking up, and it's a great holiday destination as well. So one thing is population growth, but the other one, I've already jumped ahead of myself, is that there's more jobs being created.
Yeah, there certainly is, and it makes sense, right? I mean, look, it's great to come for a holiday, and I'm sure most people do holiday in Queensland and Brisbane, but they're not going to hang around if they haven't got a job. And really, the jobs growth has been really limited over the last decade. You can see the rest of Queensland there still starting to struggle, really struggling, starting to pick up. But it's Brisbane leading the way with full-time jobs, and that's what's starting to attract people to Brisbane because, sure, the lifestyle and affordability is nice, but now they can actually get a job up here as well.
Now, I think you've made a good point about the full-time jobs, because I know there are other people saying invest in regional Brisbane, invest in the Sunshine Coast, there's more places than just Brisbane. And the answer is that's true. But why fight the big trends when the majority of the population growth and the majority of the jobs in the capital cities, there's always people going to try and chase the next hotspot, the next trend. That's not what we recommend. That's not what we do. And so while there are jobs being created elsewhere, particularly in agriculture, particularly in tourism, they're not full-time jobs. They're often casual. They're often part-time. They're often seasonal. That's not the same, is it, Brett?
No, it's definitely not. It doesn't give that strength and consistency to the economy and keep that workflow happening and keep people in jobs for longer periods of time. But that's what we're starting to see more and more of in Brisbane.
Well, there's a close link between full-time jobs and the value of prices. So people do need the security of full-time employment to make the buying decisions. Now, we keep thinking as investors, but remember 70% of the market is owner-occupiers. So owner-occupiers are what's going to drive the next property price growth phase in Brisbane, and the investors are the ones that create the property booms and the property busts. But we're wanting to find areas where owner-occupiers are going to want to live and going to be able to afford to live because they've got the right sort of jobs and they've got higher disposable income. Because if you're a part-time worker, if you're a manual worker, if you're working in agriculture, hospitality, wages growth is not going to be high in the next few years. So if wages growth doesn't go up, you're not going to be able to afford to spend more on your home. You're not going to have more disposable income. And so there is going to continue to be a disparity. It's unfortunately a social problem between the haves and the have-nots, and the rich don't commute. They don't want to commute far, so they're going to live in certain locations. So we talked a bit about jobs. Where are they all going to come from? What's going to create these jobs, Brett?
Yeah, so I've created a bit of a list there, but look, looking back on the last 10 years in Brisbane, Michael, I think I can remember a couple of tunnels being built and a few little things like that, but there's actually some really big meat to the bones now. There's actually some really big projects that are happening, and you've got a list of 8 there in front of you that are starting with the Queen's Wharf and the Cross River Rail, which is going to put in about 10 to 15,000 jobs there. We're also getting an extension or a second Brisbane one-way and a huge precinct out there. So one thing we looked at before was net overseas migration. We're going to be the closest capital to the Asian countries now. And I know for a fact there's been 6 Chinese and Taiwanese airlines that have signed up to that runway. So, I expect our tourism numbers to increase and also people who decide to stay as well. And there's a lot of lifestyle precinct factors as well to make Brisbane a bit more livable. It's been a bit of a big country town. So, the things like the Brisbane Quarter, the Howard Smith Wharves, Brisbane Live and things like that, as well as the public transport to improve the accessibility in and out of the CBD.
Well, I'm glad you admit it's a big country town. It's more than that now. I've been coming to Brisbane for a long time, and Metropole's had its office in Brisbane since 2006, and we've for the last 13 years been helping more home buyers and investors buy property in Brisbane than probably all the other buyers agents combined. But I've seen it change. I've seen it grow. And I know how the previous infrastructure spending made a difference. I like the fact that this infrastructure is being spent because it's creating local jobs, using local material, but they also leave a legacy in the long term. So that's actually very good. But again, not every area, not every location is going to benefit from it. So how do you think these changes are going to benefit certain Brisbane suburbs?
Yeah, well, look, that's how the areas are performed. Look, what's really happening, Michael, is the jobs in Brisbane and, more importantly, the whole of Queensland are happening in Brisbane within that 5 or 10 kilometre ring. So, the areas that are going to be affected are areas close by because people are going to want to live close to work. And as you said, the rich don't commute. So that you want to get that right. So, look, here's a bit of a snapshot about how Brisbane has performed over the last 5 years. The number up the top suggesting about 29.4%. The numbers down the bottom on the north and south side of Brisbane are really ranked on the last quarter, which we never take in isolation. But it's clear to see there, as we continue to say, although the average has been about 29%, there's been areas that have performed significantly less than that over the 5 years. But on the flip side, there's also areas that have performed significantly better than that. And that's an important factor that we want to take note of.
Well, that really is interesting. So while people from the south think, hey, Brisbane hasn't done too well. There's a whole lot of suburbs there that have had 40%, 25%, 30% capital growth, 10% year on year on year. And I know that's what our research department has been finding, and they're the areas where we've been specialising. And while the Melbourne and Sydney markets have been languishing for a while now, we've been suggesting for a lot of our clients to buy in Brisbane, and they've done well. But again, not on the Gold Coast, not on the Sunshine Coast. Why chase the next hotspot when you can get consistencies of this? The question is, will this continue on? Well, can I tell you that those suburbs are always going to be prize suburbs because of the school location, because of public transport, because of amenity. And so even though there is urban sprawl and growth, not to the degree of Melbourne and Sydney, those suburbs are going to always be further out, and more people are going to want to live in these more affluent areas. So you've actually given us a list of some I almost said the word, Brett. It almost came out of my mouth, hotspot.
The H word.
Because really what we're looking for is what has always worked. And that's the difference between our strategy at Metropole and others looking for what's going to work now. And then you've got to get out of it before it changes and you move to the next one. So why would you look at these suburbs?
Michael, it gets back to something and a really key point you said at the start. We don't want to think like an investor. We have to think like a homeowner or an owner-occupier. So this is a list of the 10 most demand suburbs in Brisbane right now. And they have a number of things in common that if you think like a homeowner, it makes sense. So the first things people want, and when they're moving to Brisbane and when they're going to live in Brisbane, is jobs. So jobs are very important. Once they're settled with a job, they're looking at good school catchments. Then they're looking at lifestyle precincts, public transport and accessibility to work and the CBD and things like that. So most of these suburbs here, look, they'll all have really good access to the CBD. There are areas where jobs are being created. They've got excellent school catchments, excellent lifestyle precincts. So they're areas where owner-occupiers want to live, and clearly that's the case because they're listed as the 10 most in-demand suburbs in Brisbane right now.
Now, the problem is when we put a list like this up, when I discuss it in my podcast, when I talk about it in blogs, people take it as gospel and they think any property in Toowong, any property in New Farm, in Newmarket is going to work. And it's not that way at all. And that's why I know you were reluctant to put a list up. But I said, tell us where we should at least start looking, because then you've got to narrow it down. So most people know within their own suburb, there are 3 or 4 precincts, usually even with the same suburb. And it's not just main roads and not main roads, or it's slightly industrial or commercial areas. Within the same suburb, there will be different precincts that are more valuable. Then within those, there'll be certain streets that are more appropriate. And then even within that, one side of the street will be different to the other. You can see there at the moment on this picture some magnificent city views if you're on the right side of the street. And if you're on the other side of the street, you're going to have magnificent views of the houses with the great views of the city. And that makes a huge difference to values. I know one of the things we sort of sniggle at is when we see outside buyers agents come in, have a look, see the properties that we've discarded because we've already found out about them beforehand with the off-market or the pre-market opportunities that we're given, and they think they're good because they're half the price of their hometown of Melbourne or Sydney when they fly in. So we have our own teams in Melbourne, Sydney, Brisbane, and the Brisbane team, 3 ex-estate agents, all experienced estate agents who are now working on our side to help our clients. They can pick what makes a good investment, while the ones who fly in, fly out, look at a few, make an offer, think they've done well, and sometimes they've actually done their clients a disservice.
Michael, we see this all the time, and look, I always see other social media posts or other buyers agents saying, we bought $50,000 and the one 3 streets away. But what they fail to understand is they don't have that on-the-ground market knowledge that those streets flood or they're inferior locations, and 2 or 3 streets may not sound like a lot, but we see that a lot. And as you said before, we've got an experienced team. I've been buying in the Brisbane market for the last 15 years, so we've probably bought more properties in Brisbane than anyone, and you're in safe hands when you obviously come up here with our team.
Now, it's interesting because that's what do you get perspective from? Because I remember you started off as a client of Metropole and then a buyer's agent and became a property strategy and now director of the company in Brisbane and my business partner. And all those years of perspective through the floods, through the GFC, through the ups and downs, that you can't buy from, you can hire it from us, I guess, but you can't buy that with money. The other interesting thing is that researching on the internet isn't going to be enough. Now, I think most people watching this will realise that, but there are people out there who basically say, oh, don't go there because you're going to fall emotionally in love with the property. So you can actually research it on the internet. You can get the building and pest inspector to do the check for you to make sure it's all okay. Because the theory is you take the emotion out, but boy, you miss a lot of what's really happening on the ground doing it that way.
Yeah, look, you just can't beat on the ground market depth, and especially with the areas in Brisbane with the undulations and the flooding and the stormwater, there's little things and little intricacies that, look, only people who live here will understand.
Sure. So there has been an issue with vacancy rates. Now, this is for the Brisbane CBD, and so the bar chart is the number of vacancies. The line is actually showing the vacancy rate. What's the situation at the moment?
Yeah, so look, we could probably overlap that previous graph with population growth, and when the population was down, obviously the vacancy rates were much higher, up in the low fours, but recently they've come down, and as you can see there, they're down to 2.5% now. So a lot of the apartment oversupply is being absorbed. And with more jobs being created and immigration to record numbers since there were, 2007, 2008, that's really starting to be absorbed. So vacancy rates are starting to shrink. And as we've spoken about previously, Michael, we're still getting quite a good rental yield in Brisbane for houses and also apartments.
Sure, the rental yields are much better. So I've got to give credit to SQM Research for this particular graph, and it is showing a good trend in vacancy rates. So in the old days, they used to say rents would rise when vacancy rates dropped below 3%. I don't think that's the case. I think it's more like a 2% or so nowadays, but it's getting to the point where this is overall they're showing the vacancy rates. If you break it down, houses are getting good yields because there aren't as many for lease or for sale, to be honest. On the other hand, there is still an issue with apartments. So it actually hasn't had the problems that Melbourne and Sydney have had with construction standards yet.
I was going to say that.
Very wary of buying apartments because I jokingly say today they're being built out of paper mache. I've said that for a couple of years and I'm now being proven correct. So I'd be very, very wary of buying a new apartment. Now, nothing wrong with townhouses, but in fact, in Brisbane, you can buy a house for what you'd have to only be with the same budget buy an apartment in Melbourne or Sydney, and you're getting much better yields, aren't you?
Yeah, absolutely.
Now, this graph is to show where we'll talk about where Brisbane is in the property cycle in a moment. So what this graph is showing is the green line is the steady increase. So property values go up, they go down, they cycle, and the black line is the reality of the cycle moving up and down around the long-term capital growth. And over the last 25 years, Brisbane has had on average 7% per annum compounding year after year capital growth. And there's no reason to suggest that's not going to continue, but it may not be as strong in the next little while. It may not be the 20% in 3 years. Now, what happens is there's the reality, the real market, but most people actually don't go on what's in reality. They go on what the media is telling them, what they talk about. Auction clearance rates in other states, not as relevant in Brisbane, about market sentiment, about what's going on. So Brisbane has flattened a bit. Brisbane's only had a 2% drop this last year or so compared to Melbourne, which has had 10, 12% since its peak 2 years ago, and Sydney 15%. But it's now we're perceiving it around point A in the cycle, the real Brisbane cycle, where it's starting to head up again from a minor little downturn. But the market, the perception, the red dotted line still thinks it's at point B because the media is still generally a bit negative about housing. when will people in general get in the market? Most of them will when they read in the paper that prices have gone up, when rents are going up, when auction clearance rates are going up, when they hear other people have done well. But that's because they bought the properties 3 months ago and it finally got settled and it got reported. And so point C is the real, the point C is the perception of the bottom of the cycle when the market thinks, now it's time to get in. But that's really only because in reality, the market's at point D. In other words, it's already gone up and people have heard about it. So I believe it's a great time to buy counter-cyclically in Melbourne and Sydney, and it's a really good time to get in the property wave in Brisbane because the wave is continuing on already. It's not such a counter-cyclical purchase in Brisbane because it hasn't had much of a drop at all, and especially in the areas that we're considering buying in because they've held up pretty well, haven't they?
Yeah, they certainly have. And it looks some good points there, Michael. It's also quite difficult to judge in times also because there can be a 2 or 3 month data lag before these figures come to fruition and also before the media pick it up. So we've noticed a real shift, and I think you're spot on there suggesting we're at point A because ever since the election we've had those headwinds turned into tailwinds. And look, I think it's only a matter of, again, 2 or 3 months before we're starting to see some of the figures. And by that stage, the market will be, really at point D. So it's certainly a good opportunity at the moment. And as you said, most of the areas we're buying in, you're outperforming the market by at least 1 or 2% per annum.
That makes a difference when you compound it. So let's get back to these predictions again. What's going to happen to the property markets around Australia? We're recording this in the the end of July 2019, and there's been 2 interest rate drops. The tax rebates have been announced. APRA has loosened the screws. Banks have lowered their lending criteria. So this will take a little while to work through. The other thing is currently in all states, there's not much good stock. Buyers went on strike a while ago and sellers went on strike. So unless they had to sell, they didn't want to sell because there wasn't a lot of opportunity for them to buy elsewhere or to get a good sale price. So it's going to take a little while for the sentiment to work its way through the market. But there's more green shoots than there are negatives. There are still issues with the economy. We still know the Reserve Bank's a bit concerned. We know the Reserve Bank's almost certainly going to drop interest rates again. It just said so. But putting all that together, these things will push the market forward. And I believe that by the end of 2019, the end of this year, property values will be higher than they are today in Melbourne, Sydney and Brisbane. And then going into 2020, there's going to be increasing strength. How much it's going to... Here's my out, I guess. It's going to depend upon what happens to interest rates, what happens to the overseas economy, what happens to our local economy, how bad some of the figures are, the economic figures are, because there are some issues. So our property markets aren't going to crash. We've actually upset all those property pessimists who said that we're going to have a 20% or 40% fall, and some are even still saying that. But I think those who say we're going to have a 20% rise are probably also going to be disappointed overall. But can you beat the averages? Yes, by taking a top-down approach. You look at which state's at the right stage of its own property cycle, and clearly Brisbane's at a great stage of the property cycle. Then you look within that state for the capital cities because you only invest in the capital cities where the big trends are. Don't fight the big trends. Then within the capital cities, you look for those locations where wages growth is high, where the demographics, the people living there, the owner-occupiers, forget the investors, the owner-occupiers have got the capacity and want to spend. So we're looking for aspirational suburbs where people wake up in the morning and say, that's where I want to live. And then within those locations, you choose the right areas, the right subsections of the location, and then you've got to buy the right property appropriate for there. So if you come from interstate, you may not like Queensland architecture. And Brett, I've been honest enough to say I'm not that pleased with it either. I won't make jokes about the the Queenslander architecture. But so you've got to know what's appropriate for the area and what the local demographic want. And then if you can buy the sort of property with a high land to asset ratio in the right location that appeals to owner occupiers with the ability to add value. So we love doing renovations. We love adding value through development. Development is so different in Brisbane, but it's something that we're specialising in. We have for a long time. And so we're finding sites that we can, in the future, in the short term, land bank it by having a tenant and they're having a good house. In the medium term, subdivide and put 2 townhouses or splitters or sliders. There's ways of increasing your returns by developing your properties. And then buying something with a twist, something a bit special, something unique, a bit different. All those things make it really easy to outperform. And so if we've been able to get that sort of growth in the difficult times, imagine what you and your team are going to be able to get in the good times, Brett.
Yeah, look, it's quite exciting, Michael. As you said, we're not going to rely on the market to do the heavy lifting. We're going to find a good location, but then we're actually going to add value to the property with a renovation or potentially a development, which we're having a great deal of success with at the moment. So if we're able to do that, then, look, we can achieve that figure of 20% over the next couple of years. If you don't do that and you get the area wrong, then I think you're probably going to struggle to get that amount.
I agree with you. So if you're interested in finding out about what we can do for you, why not go to metropole.com.au or 1300 Metropole? And we don't sell property. So therefore our advice is independent and unbiased. So when you sit down with Brett, there's a number of things that can happen. Some of our clients just want to have a chat and all you need is a book with some education. We'll give you that for free. You can have one of my books. You don't even have to pay $29. For many of our clients, they want to know exactly what their opportunities are, what's realistic as opposed to what they want, how long things will take. And that's where putting together a strategic property plan, not guesswork, but detailed spreadsheets about your cash flow, what your properties are currently performing. Are they going to get you to where you want? Or if you haven't got a portfolio, how long it's going to take to do that? So for a lot of our clients, they have a strategic property plan built specifically for them, very detailed plan by our research team. Then, if you want to, you can use our buyer's agent services to help you find an investment grade property. And again, we can help you because we've got wealth advisory with Ken Race. We can help you with setting up the right ownership structures, help you refer you to the right people for finance. And then in the long term, if you're interested in property renovations or development, definitely able to help you with that, and property management as well. So it's a very holistic approach your team takes, Brett.
Yeah, absolutely. Look, there's everything there, and it's important we don't just rush off and buy a property, Michael. I think it's important to take a step back and get a firm settle and structure and then move forward from there.
So if people want to know more about you, go to metropole.com.au or ring 1300 Metropole. I look forward to having another chat with you, not in 2020. We'll do it before and we'll see how the market goes shortly. Thanks, Brett.
Thanks, Michael. Good to be talking Brisbane.
Now, you probably know a little bit more about what's likely to happen in the Brisbane property markets. If you found it useful, if you learned a few things, why not help somebody else? I love it when we share this show with as many people as possible because just like I'm trying to help you become a more informed investor, I hope together as a community we're going to help more people become better informed property investors, entrepreneurs, business people. So pass the message on, please, just one way or another. Tell somebody about it, tweet it, just send them a link to the show if you know somebody who's interested in getting involved in the Brisbane market, because clearly, as you saw, there isn't just one Brisbane property market. And I particularly appreciate when you leave a review on one of the podcast apps. I know it's a bit hard to do sometimes, but if you do, I'm going to read it out. And when I read yours out, please email me, michael@metropole.com.au, and I'd be happy to gift you one of my books. And this one came from Metro Mantle, and it was left on Apple Podcasts. It's a 5-star review saying sound advice. Metro Mantle basically said, I can't even say that word, I'm at the beginning of my journey and looking at another purchase. There's so many opinions out there on what's the best strategy, what's right, what's wrong, and I found Michael's honest approach refreshing, using his own mistakes and emotional pulls as examples. It resonated with me. Well, thank you so much for taking the time to leave that review, and I'm going to continue to help educate you to become a more successful property investor and successful in other areas of your life as well. Twice a week on this show. In between, you can always catch my property update blog, We've had over 1 million people, visitors already, not page views, 1 million individuals read a blog, listen to a podcast, watch a video in this year alone. So I'm proud of how wide the reach has become. Propertyupdate.com.au, and twice a week I'll be here explaining things to you in the Michael Yardney podcast. So between now and then, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?